bankers in this early morning session. So here we are just going to discuss the 10 important MCQs of your module C. So let's start today's class, and just a one request that use your pen and paper, so that if you're finding anything is important, just note down that. Because the beautiful thing of these 10 MCQs that you are going to learn the 10 different concept of the module C. And just if you're new on the Officer Center 247, just hit the subscribe button so that you can get regular update from our side, and download the Adda 247 application so that you can get everything at a one place. Okay. And one important update from our side also, our target batch has started, and you just do not need to pay the full amount from that. You only have to use the code, that is Y422, and with this code you are going to get the big discount on the batches, on the mock test, on the ebook, and that all necessary for clearing your examination. And the very important thing I just want to tell you, that we just do not prepare you only for the 50 marks, we actually prepare you for the 70 plus 80 plus marks for the examination. Okay. So, and you are just going to get the quality content, you are going to get the fully exam oriented classes, and that actually matters for your clearing this examination. And you can understand only the 1 month that is near about left for your examination. So just let's gear up your preparation with our batches. And you just do not forget to apply the code, that is Y422, because with this you are going to get the big discount on the batches, mock test, ebooks. Okay. So let's start today's class with the very first question of today, that related to like the opening inventory, closing inventory, cost of sales are given, and you have to find out the amount of the purchase. Okay. So how to solve these kind of the question in the examination, because you are definitely going to get the one question in the examination that would be related to the cost of goods sold. Okay. So you should just know that the different type of the patterns that may be asked in the examination. So just tell me what would be the answer of this. In this question you have to apply the formula of the cost of goods sold. Just try to solve this, like how to solve these kind of the questions in the examination. Look, the very important thing, if I say what is the formula for the cost of goods sold, so what we will say, what is the formula for the cost of goods sold? That is your opening inventory, say opening inventory, or you can also just write the opening stock. Okay. So inventory and the stock, both are you just understandable as the same thing. So opening inventory you can just write, and as well as you can also write the opening stock. There is nothing to worry about that. Okay. So opening inventory you can just write here, plus net purchases plus direct expenses minus closing stock, or you can also write the closing inventory. Okay. So that's you can just write in this way, like the cost of goods sold, that will be equal to the opening stock plus net purchases plus direct expenses minus closing stock. After that you can just understand here the opening inventory, that is given the 3500. So just write here 3500 plus net purchases. You can understand as a, like, suppose that you purchase something from, like, you just if I'm just talking about, you are the debtor and the another person that is the creditor, and you just suppose that if you are the buyer. Okay. Instead of just understanding the debtor and creditor, and debtor and creditor, the case introduced when you actually take in the goods or services that is on the credit. Okay. And if you're just purchasing like by the cash, so you can also understand you are the buyer and another one that is a seller. Okay. So in this case you can understand, if you're talking about the net purchases, suppose that you purchase like anything, you purchase like the amount of the, suppose that you purchases a 12,000 rupees of the amount, like goods, okay, from this seller, but you actually just return 2,000 rupees of the product to again to this seller. Okay. So you can understand the net purchases, that actually would be the 10,000 rupees. That's why we actually introduce the net purchases here. Okay. After the direct expenses, you can understand with a very good example here, that direct expenses is all about, suppose that this is you and this is your factory. Okay. And this is your office. Like, suppose that you having the company, and the company is having the factory and the office, right? So you can understand whatever the expenses that is associated with your factory level. Okay. So that all expenses you can understand as a direct expenses, because direct expenses are the expenses that actually associated with the production of the particular goods or services, right? And whatever the expenses that is associated with your office purposes, that all known as a indirect expense. expenses. The very good example of this, like you can understand the wages and the salaries. Okay, so whenever we're talking about the wages, that actually related to your company's direct expenses, and salaries, that is indirect expenses. Okay, so this is I think now you just going to understand what are the things we included in the direct expenses. Now you only need to just apply the datas here, like the opening inventory that is given the 3500 just right here, and the net purchase, or you can also understand, because you are just having the purchases given here, so you can also just write the purchase. Okay, direct expenses, there is nothing kind of the expenses that is given to you, just skip that. And the minus closing stock, that is given the 1500, and the term is given the cost of sales. The very important thing, that cost of goods sold and the cost of sales actually just a same thing. Okay, well, that you can understand, the cost of goods sold is also known as a cost of sales. So whenever we're talking about the cost of sales, so you just do not have to be confused there. You only have to just write the amount, like the 22,000 rupees here. Now just tell me what would be the answer, that your answer, that would be the purchases, that should be your, this will be 2000, that means this would be the 20,000 rupees. Okay, so purchases of the 20,000 rupees, the correct option, that would be the last part. I hope everyone just understood this. This is a way actually you're going to solve the questions in the examination, so I think everyone just understood this. Okay, so just move on to the another question. This question is taken from the company account. Okay, whenever we are talking about the company accounts, where you are going to understand about the company account one, where you have to understand the issuance of the shares, and that is a very important chapter in terms of the examination. Okay, so whenever we're talking about the issuance of the shares, so you can understand what means by the calls. Okay, suppose that any company just issued a share of the face value of the 10 rupees, and you can understand, if the company just issues the share of the 10 rupees face value, like the face value of the 10 rupees, and suppose that company just want this amount in the installment. Okay, so suppose that some amount in the application stays, some amount in the allocation state, sorry, allotment stays. Okay, some amount in the first call, some amount in the second call. So you can understand, like, and the call word actually introduced after the allotment stage, when company just get the shareholders, right? So the in the there is a, you can understand, the application stays, after that the allotment stays, after that first call, and after that the second call, that you can understand. So after allotment, whenever like you can understand, after allotment every installment is just named as a call. Okay, so now you can understand, after allotment stage, now if calls are made on the allotted shares, so you can understand, there is a liability of the shareholders to pay that amount. And if the shareholders is not able to pay the amount, that amount is known as the calls in area. Okay, like the, you can understand, like the how much amount that is just do not, that is just not paid by the shareholders, that amount is known as the calls in area, and it is deducted from the share capital. Okay, so the correct answer, that is amount of calls in area, that is deducted from the share capital. And you can understand here that the very important thing, whenever we talk about the call scenario, so that you have to understand, suppose that, okay, suppose that just company is demanding, like we are talking about the 10 rupees, so suppose that company is demanding the 5 rupees in the application stage, 3 rupees in the allotment stage, and the 1 rupees on the first call, and the 1 rupees on the second call. Okay, suppose that there are some shareholders, those who just do not provide the called amount, or say the called amount that is just due on the shareholders to, like, to pay to the companies. Okay, when it is demanded, so the shareholders just do not provide. Okay, just you can understand, if the shareholders did not provide the like the whatever the called amount that is just demanding on the first call by the company within the fixed date, so you can understand that amount is known as a calls in area. Okay, so this is deducted from the share capital, right? So the correct option, that is the second. Now the third question, when a company issues shares at a premium, amount of the premium may be received by the company. Okay, so what would be the correct answer of this question? Just tell me quickly here. If the question is, when a company issues shares at a premium, amount of the premium may be received by the company along with the application money, along with that is actually the correct, actually the same options here. You can understand along with the application money, along with the allotment. Okay, instead of the application, you can understand there is given the allotment. So along with the application money, along with the allotment money, along with the calls. Okay, so you can understand whenever the company issues shares at a premium, so you can understand actually the premium that may be received by the company at any stage, like the application, allotment, as well as the calls. Okay, so the correct answer that would be here the all of the above. Okay, so the correct answer that would be the all of the above here. Now the next question, just understand which of the following should be deducted from the called up capital to find out the paid up capital. Okay, so whenever we talk about like the called up capital, like you just understood in the previous slides, in the previous question, the very important thing, that what we understand by the called up capital. You have to understand whenever company just demanding, or whenever just company just demanding the amount that actually due on the, or say that actually due on the allotted shares, or the you can also understand that actually due on the shareholders. That means shareholders have to provide the fund. Okay, or say just shareholders have to provide that called up amount. So that is known as a called up amount, right? Suppose that company, you can understand, we are talking about here that the 1 rupees, and suppose that this is for your 10,000 rupees shares. Okay, this is for the 10,000 shares, and this is for the 1 rupee. So you have to understand here that 10,000 rupees, that the company just called up capital, that is 10,000 rupees. Now suppose that the company actually receiving the 5,000, like the 5,000 shares and the 1 rupee. So you can understand the paid up capital that actually would be the 5,000 rupees. That paid up capital is actually the capital that is received by the shareholders. Okay, so that you can understand the which of the following should be deducted from the called up capital to find out paid up capital. So you can understand here that is actually known as a calls in area. Okay, that means company just demanding the 10,000 rupees, but company actually received the 5,000 rupees. I think everyone just understood this. Just a minute for that. Look, suppose that the company actually issues the 10,000 shares. Okay, and company just written the one stage, that is application, another that is allotment, another one that is the first call, and another one that is the second call, right? Now suppose that for the application stage there would be the 5 rupees, allotment stage there would be 3 rupees, first call that would be the 1 rupees, and the second call that is a also 1 rupees, because the face value of one share that is a 10 rupees, and these all are the only installments, right? So after the allotment stage, whenever the calls are just due on the like the allotted share, so you can understand we are talking about the first call, that is about the 1 rupees, right? That means if we're talking about the called up capital for the first call, you can understand the 10,000 rupees, but actually the company received for the 5,000 shares. Okay, company actually received the this 1 rupees for the 5,000 shares. So you can understand this is actually just would be the 5,000 rupees, and you can understand this is known as a called up capital, and this is known as a paid up capital, because paid up capital is a capital that actually received by the company. Okay, by the shareholders. So the difference between that actually known as a calls in area. Okay, that we actually understood in the previous slide. All right, so this is how we solve the questions in the examination well too. Okay, so now just tell me another question, that an accounting information system processes financial transactions and events based on which. Okay, the correct answer for this, like whenever we're talking about an accounting information system that processes the financial transactions and the events, that actually based on the generally accepted accounting principle. Okay, which is also you can understand as a term like the gap, the generally accepted accounting principles. Based on that, accounting information system actually processes the financial transactions and events. Okay, so the correct answer that would be the generally accepted accounting principle. Next question. Next question, that is actually related to your balance sheet equation, and here the initial capital is given, and just learn this, like what the statement is given here. So Mr. A started the business with the initial capital of the 2 lakh rupees, right? At the end of the year, the business was having the total asset of the 3 lakh and the liabilities of the 50,000. So what is the amount of the profit and his closing capital you have to just tell here. So how to solve this kind of the question? I just already explained you like how to solve this kind of the question, where the you have to just find out the closing capital. Okay, so you can understand whenever we're talking about the assets are given, then the liabilities are given, and that actually you prepared while you preparing the balance sheet, and balance sheet always prepared as on particular date, right? So suppose that we are talking about the any financial year that actually started from here and that actually ended here, right? So we are preparing the balance sheet here. So we are talking about whenever the assets and liabilities are given, so you can understand like the equation, or you can also just know the accounting equation, that is assets is equal to liabilities plus the equity, or you can also understand the shareholders fund, or you can also understand as a capital. All right, so suppose that we are talking about the assets are given, the assets are given the 3 lakh, liabilities are given, that is 50,000 rupees. Just a minute for that, I just only wrote here that is 3. Just a minute for that. Okay, so if I say the instead of assets, I just can write here that is 3 lakh, and the liabilities that is a 50,000 plus we have to just find out the capital, and you can understand that is nothing but a closing capital you are calculating, because we are just preparing the balance sheet here. Okay, so you can understand the closing capital, that would be what? The closing capital that would be your 2,50,000 rupees. That would be your closing capital. Okay, now you can understand you actually started your business with the 2 lakh rupees, and at the end you are having the 2.5 lakh rupees. So tell me what would be the profit here? So you will definitely say the profit is a 50,000 rupees, and your answer that would be the second part of this question. This is how you have to solve the questions of the capital, because you're definitely going to get these kind of the question in the examination. Okay, so you should just know the basic like how to solve this kind of the question in the examination. And just hit the like button, guys. I'm just watching here, that is so many less likes I'm getting on this video. Just hit the like button as well. Okay, now just calculate another question just given here. Just try to solve by your side first. Like the capital at the end of the year was given, and during the year his business earned a profit of something. He withdrew some amount for his personal use. He further invested this amount into the business, and you have to find out the capital in the beginning of the period. So how to calculate this kind of the question in the examination? Look, this is a very simple to understand. The similar type of the question we actually discussed in the previous session as well, but there is little but changes here. Okay, here you have to find out the capital that would be in the beginning of the period. You have to find out. So you only have to start from here. Whenever you are just going to get the capital is given, only the profit are given, only that is given the drawing statement. Okay, so how to just find out the capital? That is a very simple thing. That actually started from the this financial year. Okay, so again you are just making the financial, and whenever you're getting the question of the capital, you just only have to use this. Okay, that means this is the financial is starting, and this is the financial ending. Okay, and whenever we're talking about we are preparing the balance sheet, so you can understand that balance sheet we are preparing here. Okay, so from this you can also always going to just calculate the closing capital anyways. Okay, just solve this question, like whenever we have to solve this kind of the question. So in this, the capital of the Mr. X at the end of the year, actually it is given the 70,000 rupees. So we can just write here that is 70,000 rupees. Okay, isn't it? Okay, during the year his business earned a profit of the 20,000 rupees. So during the year you can understand the business actually earned a profit of the 20,000 rupees. He withdrew 7,000 rupees his personal use. So the withdrew the 7,000 rupees, that would be with the negative figure. He further invested the 20,000 rupees amount into his business. That means he further introduces the 20,000 rupees into the business. Okay, so find out his capital in the beginning of the period. That means like you have to calculate this here. Okay, so just let it be just understand as a x. Okay, and you can understand how to just reach out this capital. If you just adding here, that is x plus, okay, 20,000 minus 7,000, that would be 13,000 plus, and that would be equal to your what, 33,000, right? So you will write here 33,000, and that would be equal to the 70,000. So just tell me what would be the answer here. You are going to get like the answer that would be the 37,000, right? So that means your capital for the starting, that should be the 37,000. The correct answer that would be the option A. Okay. I'm hoping that everyone just understood this concept here. Okay, so now just do the another question, that is question number 8. You have to find out the quick ratio here. Okay, so calculate the quick ratio from the following information is giving, like the total liabilities are giving, non-current liabilities are given, current assets are given, advanced tax are given, prepaid expenses are given. The very important thing I just want to tell you here, whenever you are just going to get the term, like in the information term you are going to get the total liabilities or the total asset, you only have to understand the total liabilities is nothing but the current liabilities plus non-current liabilities. Okay, and total asset, that is also the current asset and non-current asset, right? So in case of this, like the total liabilities are given, so you know that total liabilities, that is 23,000 is given. So if you just write here 23,000, okay, and the non-current liabilities, that is given the 13,000. All right, so if I have to just find out the current liabilities, so what it should be, that would be the 10,000 obviously. Okay, so 10 plus 13, that actually just make the 23,000 rupees. So how you can just calculate the current liabilities from this information. Okay, now we just know about, like, the formula for the quick ratio is the quick asset and it is divided by the current liabilities, right? Because in accounting we have to assume the quick liabilities is more or less equal to the current liabilities, because in the accounting we just assume the, in the case of the liabilities, there is, we have to pay all the liabilities. Okay, there is no any kind of the quick liability we assume. So that means quick liability, that is equal to the current liabilities in case, because we just assume that we have to pay all the liabilities. Okay, so now if I just talk about the current liabilities, we just wrote here, so you can understand the current liabilities we actually calculated the 10,000. Now the question is, what would be the quick asset, what would be the value of the quick asset? Okay, so if the current asset value is given, okay, and advanced tax, we also know the advanced tax is our current asset, prepaid expenses are our current asset. Okay, and the current asset value is given the 40,000 rupees. So if I have to find out the quick asset, advanced tax, prepaid expenses, your inventory, that is the current asset, but not the quick asset. All right, so that means if I just deduct 2,000 and 8,000 from this 40,000, that means I would just get the value of the quick asset, and that would be equal to the 40,000 minus 2,000 minus 8,000, and that would be equal to your 30,000. That would be the value of the quick asset. Now you will tell me quick asset value, that is 30,000, and it would be divided by the current liabilities, that is 10,000, which we derived here. So you will just tell me what would be the ratio here. That would be the 3:1. That would be the answer for this question. Okay, so this is how we have to solve the questions, right? Now next question is also very good question. Okay, very good question. That profit and loss account is prepared from which of the following types of account? Personal, real, nominal. Look, whenever we're talking about the profit and loss, and what we understand by the nominal account, when we talk about the personal account, there would be some natural, artificial, representative personal account included. Real account, where we are talking about the assets, right? Now we are talking about the profit and loss. What we understand by the profit and loss, right? So you can understand in the nominal account category, we actually keep our expenses, losses, income, gains. Okay, so you can understand better here that a profit and loss account is prepared from which of the following accounts. So your answer, that should be the nominal account, only three. That is a very important question from your exam point of view. Just note down that that is a very important thing, that for this question, that profit and loss account is prepared from which of the following type of the account, that is your nominal account category. Okay, right? So I think it is clear for everyone. So that is a very important question, like the nominal account based on the nominal account category. Based on the nominal account, profit and loss account is prepared. Okay, and for the nominal account, golden rule of the accounting says what? That debit the expenses and losses and credit all the income and the gains, right? Okay. Prepaid expenses are shown in which side? Prepaid expenses, that expenses already paid by the company. Okay, that expenses, you can understand that expenses that have to be paid in the future, but company already pay. Okay, so that is known as a prepaid expense. In a very simple term, you can understand this. So prepaid expenses are always shown like always just react as a assets for your company. So that means asset side. Okay, so this is how we have actually solved the questions. And the very important thing that you learned, that you should very strong with your basic concepts. Okay, if you are very strong with your basic concept, then no any question that can just disturb you in the examination. Every question you are going to mark in the exam with a very correct approach. Okay, so prepaid expenses, I think it is clear that expenses that may be due in the future, but you already pay that. So that is known as a prepaid expenses, and that actually just react as an asset for your company, right? So this is how we actually solve the questions. Now, the very important thing that I'm just going to elaborate to you, how you can just enroll in our batches, because that is a very important thing, because this is your examination time, and the only few days are left for your examination. So just you, the very first thing that you have to do, just visit the adda247.com. Okay, and after that, just go to the JIB CIB section, and after JIB SEBI section, you have to go to the, you either just enroll in the JIB SEBI Maha Pack, where you are going to get the good validity. Okay, where you are going to get the good validity, like the 6 months 12 months validity for the JIB SEBI ka Maha Pack and JIB ka Maha Pack. And this is not the actual price. You know, when you are going to use the Y422 code, the price that too much reduced for that, right? So what you have to do, you have to go to the JIB SEBI section, and after that JIB. Okay, and if I just talk about, there are there are new video courses, there are new target batch that is introduced. So if I'm talking about this batch, like English medium batch of yours, so here you have to just you are just going to get the 83 mock tests, 67 ebooks, 130 hours live classes, and the schedule of every classes you also just going to get here. All right, so how to purchase this, how to enroll in this? So you have to go only the buy now section, and after just going to the buy now section, you only have to use the code buy 422. Okay, so after applying the code Y422, you will be able to get the big discount, like you can just watching here, flat 80% off you are going to get by this code. Okay, so after that, you only have to click on the continue, and that you can just enroll in our batches. And as well as your preparation, that should also be enhanced with our batches. Okay, and you can, there would be you can enroll in our bilingual as well as the English medium batches. Okay, so as well as you can just also just purchase the test packs, that is a very essential thing, and that actually just give the final touch to your preparation. And you are going to get it also at a very discounted price if you are going to use the code by 422. So thank you everyone for joining me in this session. Now we will meet on the tomorrow with the 10 MCQs again. And I think you all just enjoyed this session. If you just enjoyed this session, just hit the like button on this video, and share this video to your friends, to your colleagues, and subscribe the channel so that you can get regular update from our side. Thank you everyone. Thank you everyone for joining me in this session.